Hi, this is Nitin Shanbhag, Head of Investment Products at Motilal Oswal Private Wealth. Welcome to this edition of India's Vision 2030. India is likely to be one of the fastest growing major economies in this decade, and as we progress from a $3 trillion economy to a $6 trillion economy, this will open up a whole plethora of investment opportunities which can provide superior wealth creation over the course of this decade. To talk us through these opportunities, I have with me Mr. Manish Sonthalia, who is Executive Director and Chief Investment Officer PMS at Motilal Oswal Asset Management. Manish has over 25 years of experience and over 14 years of experience at Motilal Oswal Asset Management. He has been managing the NTDOP strategy, which is the flagship strategy of the AMC over the last 14 years, which has delivered a compounded annual return of 16% and has beaten the benchmark by 5% on a year-on-year basis. Manish, welcome.
Thank you, Nitin.
As we talk about these investment opportunities, I'm going to ask Manish to dwell upon some of these key themes that make India so special in the world today. Manish, you've been managing the NTDOP strategy, and when the strategy started, India was at a $1 trillion economy. And as of now, we are a $3 trillion economy. I remember the strategy had started way back in 2007-8 after Ramdev ji had conceptualized the wealth creation study for $1 trillion. How has the journey been over the last so many years?
So, I think the ongoing journey of India's growth is continuing. I mean, the thesis is playing out as expected, except for the number of years for additional trillion to get added to India's GDP. Now, over the last 4-5 years, we have seen some major reforms come into the country, which has really slowed down because there was an impact on the GDP when these major reforms got launched. So, we were talking about, let's say, demonetization or GST or RERA or IBC. This came in as very strong set of reforms. India took some time to overcome these reforms. Now, we are actually coming out, and it's now become a way of life, to implement in normal businesses all these 4 major reforms that have come through. On top of that, now today we are looking at 3 major overlaying themes over the 4 themes that we are talking about. We are talking about China plus one. That's a reality because corporations wants to diversify away from China as the sole source. Or let's say our Prime Minister's vision of Atmanirbhar, right? Being self-sufficient as economy moves away from globalization to regionalization. That's again an all-pervasive thing. Next, we are talking about PLI, incentivizing corporates so that they can manufacture and export out of it. So, all these things are on top of the ongoing journey of India's growth of 6 to 7% and 5% sort of an inflation. If we do the maths, and assuming that rupee dollar equation remains favorable or reasonable, let's put it that way, we are likely to see 3 trillion becoming 6 trillion. I would like to call it as India's golden decade. Now, it may all seem very superficial in today's context when we are dealing with Ukraine, Russia, we are dealing with inflation which is very high, we are talking about central banks in the developed parts of the world shrinking their balance sheet. All of this looks very superficial, but this is how it will play out, is what we envisage, because this is how it has played out in other emerging markets like China or Brazil. The truth is that whenever there is a basic social and economic infrastructure that is created, those economies go through a J curve. It has happened in 2004 when China was between that $2,000 per capita to $3,000 per capita. We saw in 2014-15, China moved to $7,500 per capita. Similar is the case with Brazil. Now, currently as we speak, in that we are closer to $3 trillion economy, we are talking about roughly around $2,000 per capita. Now, if this maths was to play out, there's 5 to let's say 6 to 6.5% sort of a real GDP plus, we are broadly going to see $6 trillion. We are 140 crore people today. If our growth rate is assumed to be 1%, we'll be 150 crore people. 6 trillion would broadly mean $4,000 per capita. So, the journey from 2 to 4 is the exciting bit. the overlaying theme of discretionary consumption spend, accumulation of savings pool, financial literacy, financialization, this is all going to happen. And equities as an asset class has created the maximum wealth. It is also likely to play out over the next 10 years. That is why I believe that this is going to be a golden decade for India.
The asset management company has launched a very exciting investment solution, which is called the Motilal Oswal Vision 2030 AIF Fund. Now, in this, there are obviously various themes, and I'll talk to you about some of them, and maybe you can elaborate. In the first theme, let's talk about the $1 trillion. And as we know, as we as we keep adding every trillion, there is a massive set of opportunities that open up. Which kind of sectors are likely to benefit from this GDP increase?
So we are growth investors, we all know that, right? In India, only growth investing works. In this journey of growth of India's 3 trillion to 6 trillion, basically the three pillars of the economy all are going to see growth. We are going to see growth in consumption, more so on discretionary consumption, because the pyramid of the society is going to bulge in the middle. You are going to see a big increase in the middle class of the country. That will mean, more consumption into discretionary items, because basic necessities have been taken care of and per capita income is actually. So consumption will remain a very big thing. And the way things are getting consumed, right? Today, marketplaces, digital revolutions, consumption of data, the way consumption is traversing from the brick and mortar style of consumption to online, digital, millennials, their way of thinking, all this is going to actually manifest in terms of opportunities. Next, we are looking at savings, right? 10% of savings is basically coming from households. Today, we are actually seeing a lot of savings actually getting plowed back into equities as an asset class. So, platform businesses, banks, apart from banks, or let's say your insurance companies, wealth management platforms, mutual funds, these are all going to get benefited. Within that, there will be a disruptive overlay in terms of many new things that are coming in. Buy now, pay later, fintechs, etc. These will all be a part of it. And the third is basically your investments. Now, we have really not seen too much of capital formation that has happened in the country post the global financial crisis. India in itself has actually underinvested in energy and power. Right? Today, when the economy is actually growing, your power rates are actually shooting up. Of course, we are in the middle of summer, but still the power rates are exorbitant. Or let's say when it comes to finding our own energy needs, India has really not had too much of success in finding oil or gas, or so that becomes a hindrance. But otherwise, there's a whole lot of capex that's lined up. Why? Because corporate leverage is today at a 15-year low. Post the global financial crisis, one of the main reasons was that leverage balance sheets were there. Corporate balance sheets are very unlevered today, and the economy is growing. As we move higher in terms of capacity utilization, you will have a lot of private capex come through. This is again a virtuous circle that is going to translate into higher jobs and so on and so forth. So this is the ongoing, your anti-DOP theme, so to speak. The next thing that we are looking at is basically disruption and value migration, both within sectors, within companies, the way of living, it's all transforming massively. So I think disruption and value migration again is going to be electric vehicles is a new disruption, green energy is a new disruption, green hydrogen, renewables, right? They are all going to change. So, in the next 10 years, a lot of things are actually, which companies are early in the game, how they are going to actually benefit out of this. This again will be another part of the thing. Digital businesses, so, there are a plethora of unicorns that have been found in the country. Not many of them will succeed in the next 10 years, or many of them will fall by the wayside, but a few of them will succeed. Right? Few of the companies have come out with IPOs, they have come out with fanciful valuations. All of that is getting corrected. But some of these businesses will become valuable and winners somewhere down the line. Some corrections, even from now or otherwise, you have new companies which will come at a reasonable valuation. So digital businesses again will actually mean, there is an opportunity. Third is, I believe that as the Y2K movement was the beginning of India IT growth story. India IT growth story is still pretty good today. $185 billion of exports this year. NASSCOM says it's going to be $350 billion. But in terms of manufacturing in India, because of China Plus One and PLI, I think there is going to be outsourcing of manufacturing that will happen out of India. Right? EMS, electronic manufacturing services. We're talking about Foxconn setting up their plant in Chennai. Right? We are going to manufacture Apple iPhones. It's not only going to save foreign exchange for us, right? Because a lot of our foreign exchange gets spent on electronic imports. So domestic reliability, we are talking about defense, not too much of imports. Government talks about Atmanirbhar. Again, this can be a very big area, So these are some of the examples where we think digital businesses, outsourcing of manufacturing, all come within the definition of disruption and value migration. All this within the listed and the unlisted space. This is the first time we are trying to bring a unique combination of not only investing in listed businesses but also unlisted businesses. And there is a reason why we think like this. Is that a lot of value capture is today happening in the private equity space. Before the company comes out with an IPO, a lot of value has already got captured within that PA. Of course, there is growth even after the company comes within the listed space. But if we want to capture the entire value chain of a company from, let's say, it's about to grow through a growth trajectory till at about the point in time when it's going, we have to straddle both across the listed and the unlisted. That is the reason why we actually say that we want to keep a certain percentage of allocation also for unlisted equities. That is how we are actually looking to optimize our returns for our clients.
Understood. You spoke about the financialization part, and you've been owning a lot of banks. Insurance has been one of your preferred sectors. Now, can you talk us through a little bit more about how that is likely to pan out? What is the size of opportunity basically? And it also kind of fits into the value migration space, because you're already seeing a lot of PSU bank market value share migrating to private banks too. How will this actually happen?
3 trillion to 6 trillion cannot happen if you don't have credit growth in the system. Right? This is only going to grow bigger. During the pandemic, we saw 6-7% sort of a credit growth. Now that we are going through inflation, this credit growth in the system will likely move to double digits, 8.5 to 10% type. That itself means a lot of net interest income growth, your top line growth. If you have actually being able to manage your costs well, this would result in some sort of margin expansion down the line. And of course, this journey is not going to stop here. Today we are at about 120 lakh crore sort of a book size in terms of total loan growth. We are talking about the total GDP growth itself being, let's say, now credit to GDP is basically one of the lowest in the case of India when we compare it to outside developed countries also. The case for credit to GDP itself expanding multiple times is immense out here in India, and banks would be a direct play. Of course, you will have a lot of fintechs, etc., that is going to facilitate payments, but what is important is credit creation, and that can only happen through banks. And I think, over a period of time, you will have many of these PSU banks also. Government says we are not in the business of being in the business. So, hopefully, a lot of value migration will happen from PSU to private, because these are more efficient entities. Now, HDFC Bank merger itself has created the second largest bank in the country. So, I think what we need to find out is that today the ROEs of banks, or ROAs of banks, NIMs, which is currently at, let's say, 4%, 3% type. But developed worlds don't have that sort of a spreads. how that's actually going to play out. But the size of the volume is going to be massive, right? And in the financial world and in the case of banks, the bigger the better, smaller the worse, because it's an operating leverage business, and it can take in huge amounts of capital. Where raw material is money, the output is also money. It's growth factor. So I think that will have a very big place when it comes to the portfolio, because the size of the opportunity in the bank space or the credit creation space, of course there will be NBFCs and fintechs and all of that, but banks are very, very important.
Understood. As far as the other sectors are concerned within value migration, which are the kind of opportunities that you would envisage?
So ICE engines to electric engines, electrification, electric vehicles, that's a clear case of mobility shifting away from a technology jump that you are seeing. That's a value migration, that's a disruption that we are talking about. Or let's say, brick and mortar retailing in itself is a huge business in the case of India. 65-70 lakh crores is the retail size, right? Now, all these digital businesses are actually getting overlaid on the retail size of the business. We are talking about online pharmacies, that's also a part of retail, right? We are talking about fashion and beauty, of course that's a very big part. Talking about grocery retail, that's a very big part of it. The entire retail space is getting disrupted. The size of the opportunity is massive. In the case of retail, you have to get your unit economics right, and you have to get habit formation on the table. If all of these things get right, market is very fanciful about giving valuations. So these would be some of examples where disruption, value migration is happening simultaneously, right? We didn't have enough data consumption. Telecom is today the backbone. The amount of data that is consumed is only going to go up, not down. And the business models is actually going to move to an omni-channel, where brick and mortar will be there, will be required. You will have online that will be there, will be required. Millennials will be coming new. I mean, look at the broking space itself. You're seeing what value is being captured. This is only going to get bigger. And in the digital businesses, more often than not, leader takes all. Network effect. It's very difficult to shift people away from one platform. That's the size, that's the opportunity.
And covering the unlisted space, because that's also a very important part of this investment solution. In a Cat 3 AIF, you can normally take up to 49%. What kind of percentage on average do you envisage this fund would have?
Broadly would be around 1/3, 30% types, So 1/3 will be basically your NT-DOP theme, 1/3 will be the new opportunities of value migration that's happening in the listing space.
Right.
1/3 will be your unlisted space that we're looking at. And right from pre-IPO opportunities to where there's disruption and we are able to get businesses in the PLI, Atmanirbhar, or let's say digitization, consumption, retailing, defense, all these things are on the table when it comes to the unlisted space as well.
Right.
Apart from consumption, which remains a very big thing.
Right. This seems to be a very, very interesting opportunity.
I'm very excited about it. I don't know about others, but I think, if you're really optimistic about India, which everybody of us is, this is the time to actually create a portfolio for the medium term. There's going to be pain, let's say, in the short term, but over the medium term, I think there's going to be very good money that's going to be. Because this is for real when it comes to the golden decade for India. Look around you. I mean, corporate profits to GDP 8% in GFC came down to 2%. Today we are corporate profits at 10 lakh crores, and the size of the GDP is roughly around 2,50,000 odd crores. We are talking about 4% corporate profits to GDP, 250 lakh crores and 10 lakh crores. So corporate profits to GDP is 4. Its potential latency factor is around 1 more time. which means 4 going to 8. We just got to be mindful of one thing, is that the difference between 2003 and 2008 and currently is that India was growing back then, India is growing now. In the global system, there has been a lot of money printing that has happened. You got to be very mindful about valuations, right? Because interest rates will impact valuations, right? But the size of the opportunity is just too big. Just got to find a handful of these businesses, and broadly we should be there.
On that positive note, thank you so much, Manish, and I'm sure our listeners found this conversation extremely insightful. Thank you so much, everyone, for listening in to us. Please subscribe to our YouTube channel, and please also follow us on Twitter as well as LinkedIn. Thank you.